You can't live your life without A.O. Smith. And I like it for that reason.
My name is Jake, welcome to the channel. In today's video, I want to talk about why Josh Brown loves this Dividend Aristocrat and why he talks about it so much on CNBC and on his channel on the Compound here on YouTube. So the company that we're talking about today is A.O. Smith. This is a water boiler and heater company. And also they've been ramping up their operations when it comes to water filtration, which I think is the most exciting part of their business as they expand internationally. But first, the first part of this video, I want to hear a few different clips throughout the last couple of years of what Josh Brown has been saying about this company. And then towards the end of the video, I'm going to, kind of give a brief snapshot into the dividend metrics, the PE ratio, and just kind of high level a little bit about the company. In terms of full disclosure, I don't currently own this company, and it's definitely one of those companies that I have on my watch list and that I would definitely consider adding in the future. Now, you may or may not have heard about this company. If you don't install water heaters or if you're not a homeowner, you probably have never heard of this company. It's not a company that is really generally talked about. It's not a sexy company that, is going to triple X your money or 10X overnight. It's very much a slow growing company. It's kind of like, like a Coca-Cola or a PepsiCo, where they're growing a steady 4, 5, 6% every single year in terms of their earnings and their revenue. But their share price on the other end, which we'll get to in a second, is actually outperformed the S&P 500. Okay. So a very boring business model, but they solve a fundamental need that human beings have. And the interesting thing is they've been around for over 100 years and they've solved issues that human beings have had 100 years ago. And I believe that if you were to look into the future, generations to come, this is a company that will very, very likely be around because they're serving a fundamental need that human beings have. When I think about investing, I love investing into businesses that solve a problem. Companies like A.O. Smith or companies that are addressing the world's problems and providing value to consumers and businesses, I believe that those are the best type of businesses to invest in, especially if you're a dividend investor looking to retire off of your portfolio and live 100% off your dividend portfolio. It's much better, in my opinion, to invest into stable businesses that are not as cyclical, that do well in both good and bad economic times. I'll give you a couple examples. So the way that I think about this is it's not very often that you see a company that is a growth company go bankrupt during a economic boom, as well as like more of a defensive company, let's say a consumer defensive. Not very many consumer defensive companies go bankrupt in an economic boom. But if you flip it upside down, and if you're in a down market, companies that are defensive generally don't go bankrupt in a down market. It happens, but not as often. But if you look at cyclical companies, those companies can go bankrupt in a down market. And so if you're a dividend investor, you don't want that fluctuation. You don't want that feast or famine when you're planning to live off of your dividend portfolio in early retirement, for example. But what I think is kind of funny is, Josh Brown started talking about A.O. Smith on CNBC on January 4th, 2022, and quite literally at its all-time high. So at the all-time high, I mean, literally at its all-time high. And then directly after that, it dropped 42%. So I'm not sure. He probably got some pretty nasty emails from people that follow him. But he did say that, he was looking at this over, a 3-year time horizon. But I can only imagine if you would have followed his advice at the time of buying A.O. Smith on January 4th, you're probably feeling a little like this.
Everyone calm down. It's not that exciting of a stock. It's water heaters and boilers. But if you go down to your basement right now and you look at the label on the boiler in your water heater, there's a 1 in 2 shot that it was made by A.O. Smith or one of its subsidiaries. So this is a 150-year-old company, dates back to just after the Civil War, been a publicly traded company for longer than I'm alive. But it's essentially a company that owns its space. And the reason why this space is interesting to me is because we are underhoused in this country. So this stock has been on fire since really the pandemic started. I think it'll continue. Demographically, we're going to build more and more homes. Every one of them needs a water heater. In the meanwhile, the company says about 85% of their sales each year is replacement because obviously this equipment doesn't last forever. They're also in commercial, and now they're in India and China doing not only their traditional business, but also purifying water, which is a massive opportunity. So the stock acts great. They're buying back a ton of shares. The dividend goes up every year. This is a classic compounder. Market cap is only $13 billion. I still think there's a lot of room for this stock to work. I'm almost surprised Berkshire Hathaway isn't involved or the full owner of this already. But I think they're going to have another great year, just like last year was a great year. I want to be involved, and so I started to buy it.
Are you pitching stocks or what? What are we doing here?
Let's do some. Let's chop up some tickers. No, I wanted to see if I can get you to buy a stock. All right, wait, hold on, Mr. Batnick.
I'm feeling very liquid. So,
Mr. Batnick, this is Josh Brown from Ritholtz & Co. Perhaps you've heard of us.
Nope.
We're a boutique investment bank based in Midtown Manhattan. How are you this afternoon?
Good.
Great.
Wait, how did you get my number?
Oh, that's a good question. I'll get to that in just a moment. But before we get started, I want to make sure you have a pen handy because I want to give you a ticker symbol and I want to make sure that you have it written down in front of you just in case we get disconnected. Do you have that pen? Terrific. The name of the company I want to talk about is the A.O. Smith Corporation, ticker symbol AOS. Are you familiar with the company at all? Have you heard of that?
I've never heard of it.
Okay. Based in Wisconsin, been in business since the Civil War, believe it or not. One of the longest standing publicly traded names, and yet a market cap, Michael, of below $15 billion. If you were to go down to the basement right now in your home and look at the water heater, there's a 1 in 2 shot that A.O. Smith is the manufacturer. Isn't that interesting?
You had my curiosity. Now you have my attention.
Now I have your interest. Well, here's the bottom line. We are underhoused in this country. We're going to be building millions of homes. Half of those homes or more will have an A.O. Smith boiler or water heater. And 85% of this company's sales on an ongoing basis are replacements alone. Now, what if I told you in the last couple of years they've entered the India and China market and not only selling their branded water heaters, but also doing what is it called when they clean water? What is that called?
Desalination?
No, but close. Something like that.
Wait, is this water heaters as a service? Is this like a recurring
Michael,
revenue?
clean water is a substantial health risk and a serious issue in places like India and China. So I have to ask you. I have to ask you if A.O. Smith is entering 2 of the biggest markets by population in the world with their top of the line water heaters and water cleaners. I have to believe this stock should trade substantially higher given its low valuation, high buyback, and dividend yield. Would you agree with that statement?
It's got the high dividend yield.
Yes.
All right.
About 1.3% versus a 10-year treasury at 1.6%. Plus, they bought back $400 million worth of stock last year. Okay. As they enter these high-growth markets, I have to believe you can picture the stock trading to at least $100 per share and beyond. Am I right?
Are we done?
How many shares can I put you down for?
All right, what's the deal with this?
Will I be setting this up as a joint account or an individual account? You tell me. What's easiest for you?
Why? How'd this get on your radar?
I'm trying to find stocks that I think have high prospects for this year that are paying a decent yield and buyback, have sustainable margins.
Did you find this in Barron's? Did you find this in Barron's?
No, I actually have a screen on Y charts that I use. I'm looking for stocks that are within 3% of their all-time high that pay a dividend yield. And then I end up with out of S&P 500, I end up with 30. And then I just chop through them. So I picked this one up this week. Full disclosure, and I'd like to get you involved in this name.
Is this investment advice?
This is investment advice only for you, not for anyone else watching this show. I believe you should put 500 shares away. Believe me, you'll thank me in 3 years.
Can I wait for a pullback?
Michael, what's your social security number? I'm setting up the account right now. All right.
You obviously have some time, too. We have a couple minutes left.
Well, we talked about dividend aristocrats. I want to mention my favorite, which is A.O. Smith. This company's origins are shortly after the Civil War, believe it or not. They make boilers, home heaters, water filters. 70% of what they sell is replacement only. So it's very defensive. Stock's down 29% this year, paying a 2% yield. This is the 28th consecutive year they've raised that yield. The dividend has grown at a compound rate of 17%. It's outperformed the S&P over the last 10, 20 years. I think it'll continue to. This is a very undervalued name, in my opinion. I'm doing Make the Case, and this is like, it's kind of like a follow-on for a stock that I've believed in for a long time, but I wanted to talk about it today because they had a great earnings report, and the stock has really been in the toilet for a while now, along with a lot of stocks that are perceived to be home-related. So let me throw this at you. AOS, this is A.O. Smith. So we've talked about the stock before. This company has been in existence since the 1870s, like literally post-Civil War. But it is a dividend aristocrat, and it's one of the few dividend aristocrats that did not have a good year last year, which is where I think the opportunity is. It's a stock that people tend to associate with the housing market, and not unreasonably, a lot of their businesses, water heaters and boilers, and 70% of the sales are replacement. So that leaves 30%, which is variable based on demand. So that, I think, hit the stock last year, but I think we're out of that. Look, I don't think mortgage rates are going to 8%. I don't think that'll be necessary to curb inflation. And in fact, it's very possible that as mortgage rates settle down, even if they don't fall, that we have seen the worst of the housing numbers that we'll see by some point this year. So let me throw up a chart here. What do we have? So this is just performance, and it's going back 10 years. So it's solid. Like it's not Nvidia.
Solid. That's amazing.
Yeah. So I'm saying it's a solid. You could see the fall off throughout 2022 as the home market deteriorated. Okay, so we did that part. Let's do the dividend. This is really the important thing, though. The current yield is about 2%, which is like not amazing, but there's room for price appreciation, which is what separates this from a bond. But Dividend Aristocrat, they have raised dividends for 30 consecutive years. Think about some of the years in which they've been able to do that, including 2008, 9/11. Like they have continued to raise their dividend, and in fact, they raise it double digits a lot of the time. So this is the type of stock that I am continually going to be interested in throughout the course of the year. A lot of industrials worked last year. This was not one of them because of its association with housing, but I think that's what sets up the future performance. It's a dividend aristocrat. They've raised their dividend for over 30 consecutive years. There are very few companies that have been able to do that. Think about all of the different market environments and economic environments we've been through, and they keep raising the dividend. The stock moves almost precisely in line with the XHB index ETF, of which it is a constituent holding. For those who don't know, A.O. Smith is the #1 company making hot water heaters and boilers. Right. And they sell them all over the world, but it's in Wisconsin. They've been around since right after the Civil War, this company. But look, let's throw this chart up. This is the XHB. Now give me XHB and A.O. Smith.
All right, can I ask you a wise guy question? If this stock moves in line with XHB, what, you don't like diversification? You just want the single stock risk?
Let me finish and you'll understand why. Anyway, we happen to be in the midst of a chart off. We happen to be in the midst of a housing rally, so the XHB is rallying, and I think it's taking this stock up with it, and that's fine. But we figured out with what mortgage rates have done this year, the predictions for a housing market crash really didn't come true. Existing home prices fell, but not to the degree that you would have expected, given mortgages going from 3 to 7%. And the reason why is there's just not enough houses, which is super bullish for A.O. Smith because every time you build a new house, you need new hot water heating equipment, and they have #1 market share. Additionally, like 80 to 85% of the company's business is just replacement. So even existing home, like you can't live your life without A.O. Smith. And I like it for that reason, but I just watched this crazy shit go down a week and a half ago. Let's put this last chart up, BMI. There's a reason for this.
Is that your body mass index?
Okay, this is all time. The stock is up like, I don't know, 11,000%. This is Badger meter. You know, chart off. You know the stupid glass thing on your side of your house?
Yeah.
The water meter?
What the hell is that? Yeah.
Okay. You know what that is? That's the thing that transmits information to your utility.
That's how PSG
telling them
charges
about
you.
the individual water usage at your house.
Right.
I used to pitch this stock 20 years ago over the telephone. I don't know where it was trading, maybe $10, $30, I don't know. It was the most obvious stock in the world, and if only I had taken my own advice and held it. I mean, the stock is literally up thousands and thousands of percent. That's the kind of thing that can happen to these boring, mundane businesses. And if I pitched you Badger Meter, you would not think that this was going to give you Netflix-like returns.
Nah, because you know why? These stocks are serially underpriced because they're not exciting. They're steady Eddie growers, and who's excited by 4% growth? But it can compound.
You want to
very
laugh?
nicely.
What do you think the market cap is of that stock I just showed you? I
Which
showed
one?
you how much it went up.
BMI,
Yeah.
2.8 billion.
Yeah. 3 billion.
How about that?
3 billion. Anyway, I'm not suggesting A.O. Smith is going to go up thousands of percent, but I'm just making the point.
What's the market cap of that?
It's like 10. It's nothing, dude.
10 billion?
It's literally nothing.
That's big. How big can it get?
It's not big. How big could it get? They're in India now. You know how many fucking houses they're going to have to build in India over the next 25 years? Every one of them needing filtration, needing hot water.
All right, do you own this stock? It's the second time you've done this.
I own the stock, and it's about to make a 52-week high, so I brought it back.
Okay.
Super bullish. Not investment advice.
So Josh Brown has been talking about this company for a couple of years now. He first started talking about it at the all-time highs, you know, when the market was just completely overvalued relative to where interest rates were heading. And, you know, the thing that I find interesting is Josh Brown, you know, he has a lot of compelling reasons for why this is a great company, but it does remind investors that it's not always about picking the right company, but picking the right time of when you buy a stock. Because if you would have bought the stock at $85, you're not going to participate in the growth over the next 3, 4, 5 years had you invested at a fair valuation. Okay, so I think that's really important to mention before we dive into the fundamentals or anything like that, that the price that you purchase these companies, even if they're a dividend aristocrat, the price at which you purchase the stock can sometimes dictate your overall performance for many, many years to come. So just blindly going all in on a stock, in my opinion, is never a good idea. And who would have guessed that the market would have reacted the way that it did in 2022? That's why I always like dollar cost averaging, and then you're not throwing all of your money in when the market is potentially overvalued or undervalued. You just don't know. So that's something that I wanted to make sure that I highlight. So to start off, when looking at the valuation of A.O. Smith today, the forward PE is just under 20. So I think, you know, if you go on Yahoo or you go on Google Finance, you'll look at the PE. The trailing PE is in the 40s. So really, really high based off of a higher share price. Right now, the forward PE is right around a 20. So in my opinion, a much fairer value than it was trading here the beginning of 2022. Here on Seeking Alpha, if we go into the dividend section, there's a couple of things that I wanted to share with you, some things that I look at when I'm looking at a dividend stock. First thing that I like looking at is what is the forward dividend yield? How does this compare to the S&P 500? A 1.76% dividend yield is comparable to the S&P 500, so not much different there. When you look at the payout ratio, this is really, really attractive. It has a very low payout ratio. There's plenty of room for the company to grow its dividend. And the 5-year dividend CAGR is at 13%. This is much higher than the S&P 500, for example. And then the dividend aristocrat status, the company has been paying a dividend for over 25 years. This is not an easy thing to do. This kind of comes back to what I was talking about earlier in the video, the needs versus the wants. Companies that are addressing needs that human beings and businesses have generally are able to weather the storm in both good and bad economic times, okay? So it's not a very easy thing for a company to reach dividend aristocrat status. Moving on to the dividend yield, the 4-year dividend average for this company is 1.8. So you're not getting it at a really, really steep discount today, right? And as I mentioned earlier, I would never recommend going all in on a company like this, especially with the dividend aristocrats. You can kind of pick and choose when you buy. You could do that. I personally like to dollar cost average into them. That's just my opinion. The next thing that I want to take a look at, which I think is in my opinion, one of the most important when I'm kind of comparing dividend stocks, is I love looking at the yield on cost. And because I'm looking to retire here in the near future, I want to see what this stock can potentially provide in terms of a yield on cost going forward. So we looked at the 5-year dividend CAGR, which was 13%. If you would have bought this company 10 years ago, you're getting right around a 6% yield on cost. Now, that's kind of the threshold for me. Whenever I analyze stocks, this is something that I love to do, especially for my time horizon. I like, if I'm going and I'm looking at the yield on cost of a company, if a company has lower than a 6% yield on cost over the last 10 years, I want to know why. And that's kind of concerning for me. Usually, if it has less than a 6% over the last 10 years, I usually will pass on the stock unless something dramatic changes. Okay, so that's something that I personally do. And if you don't do that already, I think that might be something that you might want to start taking a look at, or at least have on your radar. It's an easy way for me to kind of screen and see, okay, does this even merit having on my watch list, for example. And then moving on here, when we look at the dividend growth, once again, the dividend CAGR over the 3 years is 8%, 5 years, 13%, and the 10-year dividend CAGR is just under 19%. So really, really impressive dividend growth. The dividend history here over the last 28 years, it's a very, very impressive history for a company that sells water heaters, water boilers, and filtration. A very boring stock. It's not a technology company. It's not a EV company. It's a water boiler company. And they've historically done the majority of their revenues here in the United States, but now that they're expanding internationally, the water filtration part of their business is what gets me really, really excited about the future potential growth of the company. So really those are the 3 areas that they're in. They're in water heaters, water boilers, and water treatment. And I would recommend going down into your basement or wherever you have your water heater and check and see the brand of the water heater. Now, the cool thing about A.O. Smith is they also own a lot of subsidiaries. So a lot of water boiler brands may not say A.O. Smith, but they still fall under the umbrella of A.O. Smith. They own it, right? So something really interesting. I think it's cool to, when I did this earlier, I looked at my water heater. It's like, oh wow, okay, it's actually A.O. Smith. As a consumer, you don't really think about that. Also in 2019, I bought a rental property and I replaced the water heater. And I remember going to Lowe's and buying a water heater, an A.O. Smith water heater, before I even knew about the company. So it's really interesting when you kind of go through your house and see what's in there, and you can kind of get an idea of, new ideas for new companies that you may not have had on your radar. So as I mentioned, the majority of their revenues are coming from North America. At the moment, 75% are North America and 25% are rest of world. Here are some of the different brands that I was just talking about, how they have an umbrella of different brands under them. They've made a few acquisitions over the last couple of years. It's kind of cool to see how they're growing also through acquisition. And what I thought was really cool is we're talking about a water company, right? A water heating and filtration company, but yet they're still investing so much into research and development. Here over the last 10 years, they've almost spent $1 billion in research and development. And so as a dividend investor, I love to see that because they're going to come out with new technologies, new innovations that are going to help them grow. And because they own the majority of the market share in the markets that they operate, it's only going to continue their pole position going forward. And what I think is really interesting going forward is really their international expansion and what that's going to look like. And as we heard from Josh Brown, really their replacement business, right? That they're replacing home, like when a home boiler goes out after 3 to 5 to 7, 10 years. It depends on if you're maintaining them, you're flushing them. I know that from personal experience. I flushed my water heater here this year. If you don't flush them out and your anode rod gets eroded and everything, you're going to have to replace them quicker. And a lot of homeowners, a lot of them don't maintain their water heater, and then they go out much sooner, right? And so if you think about it that way, anywhere from 3 to 5 years, you could be replacing your water heater, and it's just an interesting business model. It's almost like a reoccurring subscription, like with Netflix, where every couple of years they know that you're going to need a new water heater, and it's essential to human life in the 21st century. No one's going to want to take a cold shower, right? It's just I don't know about you. I don't like taking cold showers. And so as long as I don't want to take a cold shower, I need a water heater. And that water heater, 1 and 2 water heaters that we learned from Josh Brown, 1 and 2 is most likely going to be from A.O. Smith. So it's solving a fundamental need that the world has, not only here in the US, but also internationally. They're expanding into new markets. They're expanding in different business units. But the one thing that you want to make sure, and this we learned from Josh Brown, what not to do is buy A.O. Smith when it's overvalued. Okay, this is looking at the PE ratio, the historical PE ratio of A.O. Smith, the trailing PE ratio. So for 2021, it was at around a 47. Okay, the forward PE going forward is right around a 20. Okay, so making sure that you're mindful of the price that you're paying for a defensive company like this is absolutely vital if you want to participate in the future growth of the business, of the company. Thank you so much for watching, everybody. I hope that the video was helpful. I hope that you learned something new, and I'll catch everybody in next week's video.
Please subscribe. Please subscribe.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.